Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our experts then, Kalra of Target Investing, Senthil Manikandan of Newberry Capital, and independent investment advisor Vivek Mavani join us on the show. Thank you to all for joining me on the show. Today on Hot Money, we'll discuss stocks like Titan. We'll discuss the results that came about. SPI Industries disappointed with their numbers, so we'll discuss what happened with SPI Industries and what's the way going ahead. We'll discuss a lot in terms of what's happening with Delta Corp, because that stock seems to be buzzing of late. And finally, a lot of MNC stocks, especially in the pharma space, have been doing rather well for itself. So we'll discuss MNC pharma stock. We'll discuss MNC stocks and which MNC our guests like at this point of time. But let's start with the big one, and that is Titan Industries. Titan came out with numbers which were strong. The management commentary was also decent, but the stock is trading rather flat in trade. What should one do with Titan? How should one analyze the numbers, and what's the way ahead? We'll ask our guests. So I'll start with you, Senthil. Firstly, you have a minute. How did you find the numbers and the management commentary?
So the management commentary of posting a 25% CAGR in the jewelry segment is in line with what they have been mentioning it.
Sure.
So in the Q1, the jewelry segment sales came in at a lower end of around 6% growth, majorly because of the sales impact in the June month. But in the July month, the sales subsequently has picked up. In the last few months, we have seen that among the jewelry companies, I think Titan stands out with respect to the management quality is concerned. And with respect to that, I think the current valuations are not a bit attractive. Considering it is trading at around more than 45 times 1 year forward earnings. So I think the value, as long as the earnings grow in the top end of around 25% to 30%, I think the current valuations could sustain.
Okay, current valuations will sustain. We'll discuss Titan in more detail. Vivek, you have a minute. Your opening statement on Titan. What did you make of the numbers?
Well, as far as Titan is concerned, okay, the quarter gone by, the results were slightly subdued compared to what the market participants were expecting, but the long-term structural growth story continues, and it continues very robust. And the management commentary of reiterating 25% sales growth in the jewelry segment, which is like bulk of the business, both in terms of top line and bottom line, was quite encouraging. Valuations may seem rich, but I think the valuations may sustain for a while, so long as the growth continues. We can have, I'll come back with more details, but I think it's a buy on declines for a long-term portfolio holding.
Okay, buy for long-term portfolio holding. We'll discuss Titan in more detail. But Samir, your view on Titan?
So I think the results were average because jewelry had a bigger base this quarter. So that's why the growth wasn't as expected by people. I think July onwards the growth will be better off because the base is lower. So the opposite should happen in this quarter. And the quarter gone by, the surprise was the watches EBIT margin. That surprised by coming at 22% and giving like at least 25% of the whole EBIT which came in. If you see jewelry, that was flat on flat. So I think I would rather watch at the watches segment how it grows and maintains the margin rather than the being on a jewelry optimistic. So I think it's a hold for right now.
Okay, so that's the view that's coming in on Titan at this point of time. Our guests are indicating that the counter should be watched at, and they'll take a call more after seeing the performance. So let's just open it up for discussions. Samir, what did you make of the management commentary? Are you optimistic in terms of the long-term growth for Titan?
See, long-term growth, yes, because the market shares will go to more organized and more spread out people who are concised centrally, and they have a nationalized advertising going on which pulls up rather than the regional players who are expanding in bits and pieces. So I think Titan has that edge. On the watches side, I think the main EBIT change which is happening to them is through the online sales. So like even in the call, they were pushing that the online sales have given them a whole new segment or a whole new margin watch out. But they are still cautious on that, because whether it remains constantly, I think that's the point where we have to see. And another 2 quarters I'll give before taking a call on the jewelry segment.
Okay, Vivek, what should one do? You said it's a long-term hold. If someone is looking at it, what's at investing in Titan? Should he hold on for now, or
yeah, of course, one should hold on, and every correction or a dip is a buying opportunity either for new entry or even to add to the existing holdings. See, the long-term structural growth drivers for Titan, whether it is top line or bottom line, continue to remain very strong. On the jewelry business, which is Tanishq and Zoya, the growth drivers are obviously moving from small jewelers, unorganized, unbranded, to branded, organized, because of A, quality assurance, B, thanks to GST, the compliance costs of small jewelers has increased, making them slightly uncompetitive. Third, the likes of Titan have gotten pretty aggressive in terms of gold exchange programs and golden harvest. Gold exchange, where there used to be a deduction when you exchange your old jewelry for a new, in terms of the value or the price of the gold that you get for the exchange value. Earlier, there used to be a deduction anywhere from 2% to 5%. Titan is like taking it aggressive, and they've reduced that deduction to 0. That's a fairly aggressive move, which the small jewelers, unorganized, unbranded, really would find it difficult to compete. Golden Harvest continues to consistently grow quarter after quarter, which is now almost 45% of sales contribution, and it is like what we have SIPs and mutual funds. Golden Harvest would be what you would have for buying gold and jewelry. The margin drivers as far as the jewelry business is concerned is product mix and higher share of diamond and studded jewelry, where the margins will be slightly higher compared to pure gold jewelry. The third is, of course, greater aggression in the wedding business, wedding jewelry business, where also the volumes are larger. When I say volumes, I mean per transaction volume is larger, and hence you also get better economies of scale in terms of margins. On the watch business, again, the driver has been a better product mix. Samir mentioned about online sales, but even with a slightly revamped product portfolio, they're getting better realizations per unit, and hence better margins also.
Okay.
So the growth drivers seem to be in place. It's a company which consistently delivers 24-25% return on capital, return on equity, and there's nothing to believe that's going to decline anytime soon.
Okay, so that's the view that's coming in on Titan. We need to move on to the next stock, and that is SPI Industries. Came out with numbers which were weaker than what the street was anticipating. The counter, let's see how it's down. It's out almost 6% in trade. How did the numbers pan out in trade? We'll ask our guest. Samir, I'll start with you. What did you make of the numbers? SPI?
So, if you see the revenue growth, 23% domestic growth, exports were flat. So, I think the revenue side was good. The major change which happened with them is the accounting standard change, and they took around a 22 crore hit on the PBT, and their tax rate increased by 3 to 4%. So from a 19% to 22%, that tax rate came. So that impacted the earnings. Otherwise, I think it's a stable earnings, but I'll see another quarter because there has been a preponement of product buying. So now how August and September plays out for them, I would rather wait and watch.
Okay, wait and watch for SPI Industries. What about you, Senthil? What did you make of SPI Industries numbers?
So number, like Samir mentioned, I think the domestic segment outperformed the export business, and the export business growth in high single digit was not in line with the street's estimate. That's why I think there has been a negative sentiment today. But if you look at the company, I think two major segments, especially the customs in this one, I think they have been doing exceedingly well in the last 3-4 years, and even on the margin wise, I think the consolidated entity posting upwards of 20% EBITDA margin. I think both the business has tremendous potential going forward, and having a strong balance sheet and with a net cash of around 270 crores, I think the company has tremendous potential, and we remain quite bullish on the company.
Okay, quite bullish. And Vivek, do you track the company?
I don't track SPI Industries, so I'll reserve my comments at this point of time.
Okay, we'll open it up for discussion. Senthil, what about the valuation? What if someone is looking to invest? Is this a good entry point for SPI Industries?
So for someone who wants to invest, he can start accumulating on a sustained basis, because what the company has been doing is like in the domestic agrochemical space, they are getting into the in-licensing with the global pharma players or the innovators, and in the export market, they are forming JVs, and then what they basically doing is the custom synthesis business, which is unique play in the agrochemical space. Because if you look at the other listed players, either they are the domestic focused branded retail players, or like UPL, which are there into the global agrochemical market. So focused contract manufacturing business is going to grow with low base India manufacturing business. I think all these low cost manufacturing business is going to shift to India. So with that theme, I think having a strong balance sheet and the sustained relationship with the global players, I think SPI Industries stands out among the other players.
Okay, so it's a bullish bet that's coming in from Senthil, but more on a staggered basis. And Samir, if someone is looking to invest for the long term, would you be bullish on SPI Industries?
So no, I don't think so right now is the point, because what happens in September quarter, the numbers come down and there might be another disappointment over there, because these expenses will stay quarter on quarter basis also. So you might see a subdued 2-3 quarter results. So I think there might be a lower downside also. So I think wait and watch for another
Is
quarter.
this only the numbers that came out? Is it an industry-wide phenomenon that there is slowing down, or is it only SPI Industries?
So what happened this time when the rains got preponed, the sowing got preponed, and that's why the June factor came much more. Otherwise, it's more spreads to June and July. So that's where the June sales were higher for everyone, if you see UPL or other ways. Now, how much post monsoon the sales come in, that's more important, because otherwise July, August, September will be really bad, because any which way it's seasonally low. So I think if it's even bad off and it's already preponed in the June quarter, I think there'll be more downside to this sector as well.
Okay, so UPL also gets in, but UPL came out with decent set of numbers.
Yeah, so that's what I'm saying. So UPL came out with decent numbers, but UPL has another debt issue. They'll raise debt. They'll have another dilution in the subsidiary base. So the numbers will change next quarter as well, because the subsidiary dilution will result in a change in consolidated basis numbers. So I think there is a change in this quarter. I think let's wait and watch for this sector.
Okay, so it's a wait and watch approach that Samir is indicating at this point of time. We'll take a short break this time around. We'll get you, but after the break, we'll get you Milind Barve's view on HDFC AMC's growth plan on the other side of the break, the big listing of today.